Well, seems like the Japanese yen is about to cause trouble for the US economy. In simple terms, if you don't understand how that really troublesome is, well, you should stick on this video. If you're interested in such kind of topics, well, understand why the yen is likely to be troublesome for the US economy, just like us up for this channel. You try to understand that one of the first main factors is when we start seeing Japanese yen becoming unpredictable. We should try to understand when you start seeing Japan ending what's known as the yen carry trade. For those who don't understand the yen carry trade, that's when, in simple terms, it has been a currency where you can borrow it without interest, like almost with no interest in return. Like in simple terms, you borrow money for other currencies or for let's say for US stocks or Bitcoin, whatever. Most especially for traders, investors in simple terms, people who understand in such a caliber where you can borrow a currency with almost no interest, then you venture into other yields like the US treasuries, like bonds, everything in simple terms. And by the end of that period, where you can return back the money with zero interest in simple terms, well, you make a profit. However, that's likely to be ending. Ever since the Bank of Japan raised interest rates from 0.25 to 0.75%. Well, it's still low to the rest of the economy, but we should try to understand that these are real numbers that are coming out. This is real trouble that's likely to be coming. In simple terms, for those who don't understand how Japan is in big trouble, actually, before we think of Japan being in big trouble, how's troublesome is it for the US economy? Because this video shows how troublesome this is for the US economy. In simple terms, we should try to understand what's the function of Japan, what's the importance of Japan in the global economy. Well, Japan is the greatest global creditor of all times, actually. For the last 30 years, Japan has been the biggest global creditor for all the rest of the nations in simple terms. This has been a currency, and this has been strategically introduced. In simple terms, we should try to understand that Japan has been always doing its level best to keep its interest low. In simple terms, to dominate exports in simple terms, because whenever it has been tried to sell its goods, to have better prices, to have cheap prices, to have consistency in markets. That's why even until today it's still having a surplus market with the US economy. We should also try to understand that Japan's economy, when we speak of being the greatest credit of all time, Japan we should try to understand the structure of the global economy. It has almost, I would say, a 50% in hand. It controls a 50% in hand of cash flow that goes through the global economy. For context, for those who don't understand, I'll give you just another estimate. Another estimate of 250 or 80, 250 to 800 billion US dollars. Well, those are focusing on yen dominated loans to non-banks, especially let's say the BIS, the Bank of International Settlements. That's money that almost within being borrowed, I would say, being got from the yen to international bankings. I'm speaking of the shadow banks. Well, mid-range estimates, they estimate, or let's say the FX derivatives, swaps, hedge positions, that's almost 1.2 trillion US dollars in simple terms. And for context, for those who don't understand, the border estimate is between 3 to 20 trillion US dollars in simple terms. That's almost hedging, including $4.5 trillion in overseas assets. That's Japan, is speaking of Japan. But that's not the big picture. The biggest picture comes, let's look at the reserve that Japan is having today, like the foreign reserve that's holding in simple terms. Well, Japan's reserves rose from 11.98% to 1.36% simple terms. But this is what makes it funny about the reserves that Japan is having. Well, out of the 1.36 trillion reserve Japan is having, well, 1.1%, 1.1 trillion US dollars is being held by the US treasuries. And to make 1.1 trillion in foreign currencies, that's especially US treasuries. It has almost 11 billion in reserve reserve positions, 60 billion in the SDRs, and also 113 billion US dollars in gold. That's almost amounting, I would say, 1.4 trillion dollars in reserve. However, how about that debt? Well, Japan is having a debt of between 9 to 10 trillion US dollars. That's almost 250%. Hope we are all still together. That's almost 250%. Okay, 240, 250%. Okay, because if you're having reserve of almost 1.2, not almost $2 trillion, and you're having a debt of $9 to $10 trillion, and you're finding yourself in a slow growth kind of economy, you should all try to understand this where it becomes kind of robust to understand. It becomes a criteria where we have to keep a keen eye when Japan starts leaving the yen carry trade into existence. When Japan stops feeling like it's having when Japan feels like the burden is becoming big, because for the last 30 years Japan has been always keeping its interest low just to have a competitive market. That's why it has been having a surplus market with the US economy. But it's likely to be gonna be breaking. To make matters worse, as I speak right now, Japan is the biggest holders of foreign US treasury in simple terms, because that's almost 1.1. I imagine as the stimulation that's taking place in Japan and how inflation, because one of the main reasons why Japan is increasing its interest rate is one, inflation. Because of the inflation that's almost at 3%, well, with the strong growth economy, the labor force, okay, they are facing the age barrier, because there's no labor force in the Japan economy. I'm speaking of the fifth economy that has ever happened on planet Earth. We should try to understand this kind of economy that's kind of slowing down, and this slowdown is not only in Japan, it's also within the rest of the world. And this all ventures us to all one thing. We may say that dollar losing value. We may say, I'm gonna say globally, we are losing what they call productivity. Globally, we have lost productivity, and all that brings that to one country. Well, and it's not actually his fault, because he has been hardworking when others are going slowly. I'm gonna say today China is the biggest productive country. The rest of the countries, if you look at them, US, whatever, the biggest economies as you see them today, I'm gonna promise you, China dashes them down when it comes to productivity. These guys, I feel like they work day and night. They have no what would be calling day offs, and their productivity growth is way insane. Even their GDP growth actually is among the biggest GDP growth in simple terms. You should also try to understand that Japan's character. Well, back to Japan. You should try to understand why Japan is in this position. Well, Japan has borrowed to the extent that it doesn't feel like it can borrow. We should look at its bonds. Its 10-year yield actually today just hit at 2%. Well, that makes it more attractive for let's say money abroad to be brought back home, because the bond market of the Japan are kind of attractive to I would say to domestic markets in simple terms. That means any Japanese are having money from foreign countries, they're likely to bring it back home so that they can invest in their own country. And their bonds are kind of interesting. That means one or two things. Is it likely that the Japanese, or I'll be calling the US treasuries, aren't they like kind of being haunted in one way or the other? We have to understand China, which was the biggest holder of US treasury, just almost dropped, I would say almost 800 billion US dollars. Today's holding, I believe, around 700, something like that, because it was the biggest. However, today it's no longer the biggest because of the war between China and the US in simple terms. Well, they no longer want to be dependent as they used to be dependent on one another. They're trying to act independent over one another. We should try to understand that we are talking of Japan in simple terms. If China dropped its treasury bonds, well, it might have its reasons, because there's I would say, trade wars in simple terms. But for Japan, it's in the name of survival. For Japan, it's in the name of how can I survive in this kind of economy? How can I survive when I cannot pay back the debt that I'm facing right now? How can I survive in a state where I can no longer use the yen carry trade? Many may look at it like Japan maybe is just a bad performing economy. Yes, one or the other, it could be right, but we should also try to understand that this indicates that Japan in one or the other is looking for survival. It's not about the state of looking over a way of ending debt. It's looking for survival, one or the other. And this doesn't only incur on Japan, this incurs all on the biggest economies that we ever known. However, thank you for watching. See you in the next one.